Hey there. Ready to dive into some seriously interesting stuff? We've got a whole stack of reports here on HDFC Bank's latest earnings call.
Yeah.
And trust me, this isn't just about numbers. It's like a glimpse into how India's banking giants are thinking about the future.
Yeah. They're playing it smart.
Right.
Not just chasing quick profit.
Exactly.
They're building a fortress, a really solid base.
Yeah.
Even if it means a slightly slower pace right now. This is a bank.
It's a long game.
Thinking 5-10 years down the line?
Yeah.
Okay.
So let's unpack that.
Yeah.
We're seeing a 17% jump in adjusted profit growth,
Right.
which is impressive on its own.
It is.
But then they're intentionally slowing down loan growth to fine-tune that loan-to-deposit ratio.
Mm-hmm.
It's like they're taking a strategic pause.
Yeah, absolutely. It's all about positioning.
Would you say?
HDFC Bank has this plan, to match the banking system's growth rate in fiscal year 26, and then bam,
Okay.
surpass it in 27.
Yeah.
They're basically saying, we're going to be ready to pounce when the opportunity is right.
So they're not worried about being left behind in the short term.
Not at all. They're confident in their strategy. It's about carefully managing risk and building that really rock-solid foundation. Think of it like this. They're the tortoise in the race.
Oh, I like that.
Not the hare.
I like that a lot.
Slow and steady wins the race.
And speaking of risk, what about credit quality? Any signs of trouble on the horizon?
They're being super cautious, as they should be.
Yeah.
Right now, things are stable, but they're already looking ahead, anticipating potential challenges in the next 2 to 3 years.
Mm-hmm.
Clever move.
Yeah.
Considering they had been growing their unsecured loan segment at a rate of 19%.
Whoa.
But now they've pumped the brakes,
Oh.
bringing it down to 9-10%. It's all about calculated moves.
So they're seeing those potential headwinds, and they're kind of adjusting their sales accordingly?
Exactly.
But what's fueling this confidence in their ability to ramp up growth later on? What's their secret sauce?
Well, a big part of it is their focus on deposits, especially those granular retail deposits. Think of it as building a massive reservoir of funds.
Okay.
They're willing to accept slightly lower margins in the short term to secure a really robust deposit base.
Right.
They know this will give them the fuel they need to power their growth engine when the time is right.
It's like stockpiling resources for like a future expansion.
Right.
Right. Speaking of expansion, they opened a whopping 240 new branches this quarter.
I know. It's a lot.
That's a bold move in a supposedly slow environment.
Yeah.
What's the thinking there?
Well, it's a really powerful statement about their belief in India's long-term economic potential. Remember, they're not just focused on the big cities. They're pushing into rural areas where they see a huge untapped market. These branches are their outposts strategically placed for future growth.
So while others might be hesitant,
Right.
HDFC is planting seeds for a bountiful harvest down the road.
Exactly.
It's like they're playing chess while everyone else is stuck in a game of checkers. But this brings us to their liquidity coverage ratio, LCR, which is currently sitting at a sky-high 128%.
Right.
Isn't that a bit excessive?
Well, not if you consider their strategy. It's like having a massive emergency fund, a safety net for any unexpected bumps in the road. Remember that draft circular from the RBI about lending by group entities? That could have a significant impact on their subsidiary HDB Financial.
Right.
This high LCR gives them the cushion to absorb any potential shocks. They're ready for whatever comes their way.
So it's not just about being cautious, it's about being prepared.
Exactly.
But aren't they worried about missing out on short-term gains with all this prudence? It seems like they're playing it very safe.
Well, they're more concerned with building long-term value. Remember, it's a marathon, not a sprint. This focus on stability, on building a strong balance sheet, is actually a major differentiator for them. It sends a really clear message to investors.
What's that?
We're in it for the long haul,
Yeah.
and we're going to do it right.
It's like they're saying we're building a legacy,
Yeah.
not just chasing a quick buck.
Exactly.
But hold on, before we get too deep into that,
Yeah.
there's one thing that really jumps out at me. Their fee income. It grew by a healthy 17% this quarter.
Wow.
Driven by third-party products. That's a pretty significant chunk of change, wouldn't you say?
Absolutely, and it highlights a really crucial aspect of their strategy,
Which is?
diversification. They're not putting all their eggs in one basket.
Right.
This reliance on multiple income streams makes them much more resilient to market fluctuations. It's like having a diversified investment portfolio.
Yeah.
You're spreading the risk and maximizing your potential for returns.
So they've got the fortress, the supplies,
Right.
and now multiple streams of income flowing in. It really does seem like they're setting the stage for something big.
Yeah.
But what exactly does that future look like? Where are they headed with all of this?
Now, that's the million-dollar question, isn't it? To understand that, we need to dig a little deeper into their future guidance.
Okay.
Especially when it comes to those areas you mentioned earlier.
Okay.
Credit quality outlook, asset quality,
Yeah.
and how those 240 new branches fit into the grand plan.
All right, let's do it. This deep dive is just getting started.
Let's go. Remember those 240 new branches we talked about?
Oh, yeah.
It's a huge investment.
It is.
Especially when you consider the current economic climate. But it really shows their commitment to reaching new customers and expanding their footprint, particularly in those underserved rural markets.
So it's not just about adding branches in big cities, right?
Yeah.
They're venturing into the heartland of India.
Exactly. They see enormous potential in India's smaller towns and villages. As India's economy continues to grow, these rural markets are going to become increasingly important. HDFC Bank is getting ahead of the curve, establishing themselves as the go-to bank for a whole new generation of customers.
It's a brilliant strategy, tapping into a market that's often overlooked. But reaching those customers, especially in rural areas, requires a different approach.
It does.
How are they adapting to those unique challenges?
They're using a clever blend of traditional and modern approaches. Think physical branches, coupled with cutting-edge digital solutions. It's about making banking accessible and convenient.
Okay.
Whether you're in a bustling city or a remote village.
So they're not abandoning physical branches altogether. Some people thought the future was all about online and mobile banking.
Right. It's about offering choices, meeting customers where they are. HDFC Bank understands that a hybrid approach is key. Especially in a diverse market like India, they're blending the best of both worlds to cater to a wide range of preferences and needs.
It's like having a physical store and a top-notch website. You get all your bases covered.
Exactly.
But let's talk about that elephant in the room. The potential impact of the RBI's draft circular on lending by group entities. This could really shake things up for their subsidiary HDB Financial, couldn't it?
It's definitely something to watch, but it's important to remember that these are just draft guidelines. The final version could look quite different. HDFC Bank, along with the rest of the banking industry, is actively providing feedback to the RBI, ensuring that any new rules are practical, fair, and ultimately beneficial to the banking sector as a whole.
So they're not just sitting back and waiting to see what happens. No. They're trying to shape the regulations themselves.
Exactly. It's a collaborative process. They're working with the regulator to ensure that any changes support the long-term health of the banking sector.
That's good to hear. But what about their future guidance? Particularly on those key areas we discussed earlier. Credit quality, asset quality, and future growth. What are they saying about their expectations for the coming quarters?
They've been a bit cautious about giving specific numbers, which is understandable given the current global economic climate. But their overall tone is one of cautious optimism. They seem to believe that the worst is behind us and that the stage is set for a gradual recovery.
So they're not breaking out the champagne just yet.
No.
But they're also not hitting the panic button. It's a balanced perspective.
But what about loan growth? Investors always want to know about growth.
Of course.
Have they given any indication of what they're targeting, even in broad strokes?
They've made it clear that their priority is maintaining a healthy balance sheet and ensuring strong credit quality. They're emphasizing a prudent approach, focusing on sustainable growth rather than chasing short-term gains. It's about building a strong foundation for the future.
That makes sense. But what does that mean in practical terms? How do they see their loan portfolio evolving in the coming years, especially given their cautious stance on credit quality and their expansion into new markets? They're focusing on growing strategically, expanding their presence in both urban and rural areas, and diversifying their loan portfolio across different sectors. They're also leveraging technology to improve their credit assessment processes and manage risk more effectively.
So it's not just about lending more, it's about lending smarter.
Exactly.
It's about finding the right balance between growth and risk management.
You got it. They're being selective about who they lend to. Focusing on customers with strong credit profiles and businesses with solid growth potential. They're also closely monitoring economic conditions. And adjusting their lending practices accordingly.
It's like they're carefully navigating a winding road. Anticipating potential hazards and making adjustments along the way. But with all this talk about caution and prudence, it's easy to forget about the potential rewards.
Sure.
What kind of growth are they ultimately aiming for?
They haven't given specific numbers,
Right.
but their actions speak volumes.
Okay.
Their investment in new branches, their focus on attracting deposits, and their emphasis on building a strong balance sheet all point to a future where they are well-positioned to capitalize on growth opportunities
Okay.
when the economic tide turns in their favor.
It's like they're building a powerful engine,
Yeah.
but they're keeping it in idle for now,
Right.
waiting for the perfect moment to hit the gas.
Exactly. And when that moment comes,
Yeah.
they'll be ready to accelerate with force, leaving their competitors in the dust.
Okay, so they're being cautious, but they're not afraid to be bold when the opportunity arises. But what about asset quality? We know they're being careful with their lending,
Right?
but are there any existing assets that could pose a risk to their future performance?
That's a critical question,
Yeah.
and one that they've addressed head on.
Okay.
They've been proactively monitoring their loan portfolio, identifying any potential areas of concern,
Right.
and taking steps to mitigate those risks.
Okay.
They've also set aside reserves to cover any potential losses, further strengthening their financial position.
So they're not just hoping for the best.
Nope.
They're actively managing potential problems before they become major issues.
Exactly. It's about being proactive, identifying potential risks early on,
Right.
and taking decisive action to address them. This approach is reflected in their strong asset quality metrics and their overall financial stability.
It's like having a skilled mechanic constantly inspecting your car,
Yeah.
making sure everything is running smoothly and addressing any minor issues before they turn into major breakdowns.
That's a great analogy. And it highlights the importance of having a strong risk management framework in place.
Right.
Especially in the banking industry, HDFC Bank has clearly made this a priority.
Yeah.
And it's paying off in terms of their financial performance and their reputation for stability.
It's clear that they're playing the long game, building a bank that's not only profitable,
Right.
but also resilient and adaptable. But let's shift gears for a moment and talk about their digital strategy. How are they leveraging technology
Yeah.
to enhance their operations, improve customer service, and stay ahead of the curve in a rapidly evolving digital world?
That's a great question, and one that deserves a deep dive all its own. HDFC Bank is investing heavily in digital innovation, from mobile banking apps to artificial intelligence and data analytics. They're using technology to streamline operations, enhance the customer experience, and identify new growth opportunities.
So they're not just jumping on the digital bandwagon.
No.
They're using technology strategically to transform their business model and create lasting value.
Precisely.
Yeah.
They're embracing digital innovation as a core strategic pillar, not just a tactical add-on. They understand that technology is essential for long-term success in today's rapidly evolving banking landscape.
It sounds like they're on the right track.
Yeah.
But let's get back to their future guidance.
Okay.
What are they saying about their expectations for the coming year? What key metrics should investors be watching to gauge their progress and assess their overall performance?
They've highlighted a few key areas to watch.
Which are?
Loan growth, net interest margins, and operating expenses. They're projecting steady loan growth, driven by their expansion into new markets and their focus on strategic lending.
Right.
They're also expecting to maintain healthy net interest margins thanks to their efficient management of deposits and their focus on high-yielding assets.
So they're not just talking about growth.
Real.
They're talking about profitable growth.
Exactly.
That's what investors want to hear.
Of course.
But what about operating expenses?
Yeah.
Are they expecting to keep costs under control as they expand and invest in new technologies?
They're committed to maintaining operational efficiency, leveraging technology to streamline processes and reduce costs. They're also focusing on improving productivity and optimizing their branch network to maximize efficiency.
So they're not letting their growth ambitions get ahead of their ability to manage costs effectively.
Yeah.
It's a balanced approach that should resonate with investors who are looking for both growth and profitability.
Right.
But let's not forget about those other crucial areas we discussed earlier. Credit quality, outlook, and asset quality. What are they saying about those key factors that will ultimately determine their long-term success?
They're maintaining a cautious outlook on credit quality,
Okay.
acknowledging the potential challenges in the current economic environment.
Right.
However, they're confident in their ability to manage risk effectively and maintain strong asset quality. They're closely monitoring their loan portfolio, identifying any potential areas of concern, and taking proactive steps to mitigate those risks.
It sounds like they're taking a very hands-on approach to risk management,
They are.
which is reassuring for investors. But beyond those specific metrics, what's the overall message they're sending about their future prospects? What's the big picture takeaway for investors who are considering adding HDFC Bank to their portfolio?
They're projecting confidence and optimism about their future, highlighting their strong financial position, their strategic growth plans, and their commitment to delivering long-term value for their shareholders. They're positioning themselves as a leader in the Indian banking sector, a bank that's not only built to last, but also built to thrive in a rapidly changing world.
It's an inspiring message.
It is.
And one that's backed by a solid track record of performance and a clear vision for the future. But let's be honest, no bank is immune to challenges. What are some of the key risks that HDFC Bank is facing in the current environment?
One of the biggest risks is the uncertain global economic outlook, rising inflation, geopolitical tensions, and supply chain disruptions are all creating headwinds for businesses around the world. And India is no exception.
Of course.
They also face increasing competition from both traditional banks and fintech startups, who are all vying for a share of India's growing financial services market.
So they're operating in a dynamic and challenging environment.
They are.
But they seem well equipped to navigate those complexities. But what about their commitment to sustainability? How are they incorporating environmental, social, and governance ESG principles into their operations and decision-making?
That's another area where HDFC Bank is taking a leadership role. They've made significant strides in integrating ESG considerations into their lending practices, their internal operations, and their community engagement initiatives. They're working to reduce their environmental footprint, promote financial inclusion, and support sustainable development in the communities they serve.
So they're not just focused on profits. They're taking a broader view of their role in society and their impact on the world around them.
Exactly.
But how are they translating those principles into concrete actions? What are some specific examples of their ESG initiatives?
They're offering green financing solutions to support renewable energy projects and sustainable infrastructure development. They're also promoting financial inclusion by extending banking services to underserved communities and empowering women entrepreneurs. And they're committed to reducing their own environmental impact by adopting energy-efficient practices and minimizing their carbon footprint.
It sounds like they're really walking the walk when it comes to ESG.
They are.
Not just talking the talk.
Exactly.
But how are their ESG efforts being received by investors?
It's been very positive. Their strong ESG performance is attracting investors who are looking to align their portfolios with their values and support companies that are making a positive impact on the world. They're seeing a growing demand for their ESG-focused products and services. And their commitment to sustainability is enhancing their reputation and brand value.
It's a win-win situation.
It is.
They're doing good for the world and doing well financially. But let's face it. No bank is perfect. What are some areas where HDFC Bank could improve their ESG performance? What challenges do they face in further integrating sustainability into their operations?
One of the biggest challenges is ensuring that their ESG initiatives are truly impactful. And not just window dressing. They need to measure and report on their progress transparently, holding themselves accountable for achieving their sustainability goals. They also need to address the concerns of critics who argue that some of their lending practices, particularly in sectors like fossil fuels, are not aligned with their stated commitment to sustainability.
So there's always room for improvement.
Always.
Even for a bank that's considered a leader in ESG. It's an ongoing journey, not a destination. But let's shift gears a bit and talk about their human capital. How are they attracting and retaining top talent in such a competitive market?
They're known for having a strong corporate culture that values employee development, diversity, and inclusion. They offer competitive compensation and benefits packages, and they provide ample opportunities for professional growth and advancement. They're also investing in training and development programs to equip their employees with the skills they need to succeed in a rapidly evolving digital world.
So they're investing in their people as much as they're investing in their technology and their infrastructure.
Absolutely.
But what about their leadership team?
Yeah.
What's their vision for the future of HDFC Bank? Where they see the bank headed in the next 5 to 10 years?
They've articulated their ambition to be the leading bank in India, not just in terms of size, but also in terms of customer satisfaction, innovation, and social impact. They're aiming to be a role model for the industry, setting the standard for excellence in banking and beyond.
It's a bold vision.
It is.
But based on what we've discussed today, it seems like they're on the right track to achieve those ambitious goals.
They've certainly got the right ingredients in place.
Like
a strong balance sheet, a diverse revenue base, a commitment to digital innovation, a focus on sustainability, and a deep understanding of the Indian market. It will be fascinating to watch their journey unfold in the years to come.
This deep dive has been incredibly insightful.
It has.
We've covered a lot of ground today, from their financial performance and growth strategy to their risk management framework and their commitment to ESG.
Yeah.
But as with any deep dive,
yeah,
we've only scratched the surface.
Absolutely.
There's always more to learn, more to explore, and more to discover.
And that's the beauty of it. The world of business and finance is constantly evolving, presenting new challenges and new opportunities. It's up to us to stay curious, stay informed, and keep asking questions.
So for all of you out there who are intrigued by HDFC Bank's story, don't stop here. Keep digging, keep researching, and keep learning. You might be surprised by what you uncover.
And who knows, you might even discover your next great investment opportunity along the way.
Thanks for joining us on this deep dive into the world of HDFC Bank. Until next time. Keep exploring, keep learning.
Keep diving deep.
And keep diving deep. All right. So we've explored HDFC Bank from like every angle.
We have.
Their strategic moves, their vision for the future, and even their commitment to sustainability. But let's bring it all back to like you, the listener, the potential investor. What does this all mean for someone who's considering adding HDFC Bank to their portfolio?
That's the crucial question, isn't it? We've seen their impressive financials, their careful approach to risk, and their ambitious plans for the future. But how does it all add up for someone looking to invest?
Let's break it down. First off, their financial performance is stellar.
It is.
Consistent earnings growth, a diverse range of income streams, and that laser focus on cost efficiency. It's a pretty compelling picture for investors who prioritize stability and, of course, profitability.
We're absolutely right. And remember, they're not just resting on their laurels. They're strategically positioned for future growth. Especially when the economic environment becomes more favorable. They're laying the groundwork now, which could translate into significant gains for those who get in early.
It's like they're a coiled spring, ready to unleash its energy at just the right moment. But every investment comes with risks.
Of course.
What are some of the potential downsides that investors should be aware of when it comes to HDFC Bank?
Well, the global economic landscape is always a factor. Inflation, geopolitical tensions, you name it. These can all impact India's economy, which would inevitably have ripple effects on HDFC Bank. It's something to keep in mind even with their strong domestic presence.
So no matter how strong a company is, they're still part of a larger ecosystem. That can be unpredictable.
Exactly. But here's the thing. HDFC Bank has a proven track record of navigating those economic storms. They've built a resilient business model that can adapt and withstand shocks.
Okay. That's reassuring. But are there any specific red flags? Any warning signs that investors should watch out for? Anything that could indicate a shift in their fortunes?
Keep a close eye on their asset quality. Right now, it's strong. But any significant deterioration in their loan portfolio could be a cause for concern. Also pay attention to regulatory changes. Remember that RBI draft circular we discussed? Something like that could have a ripple effect on their business model and ultimately their profitability.
So it's not just about looking at the numbers. It's about understanding the context, the forces at play that could impact their future.
Precisely. The more informed you are, the better equipped you'll be to make those investment decisions.
This deep dive has been an eye-opener. We've really gotten to see HDFC Bank in a new light, not just as a financial institution, but as a strategic player shaping the future of banking in India.
What stands out to me is their unwavering commitment to the long game.
Yeah.
They're not chasing short-term gains or making risky bets. They're methodically building a sustainable business, a legacy that can thrive for years to come.
It's a powerful message for investors.
It is.
It's not just about picking stocks. It's about choosing companies that are building something meaningful, something that will stand the test of time.
Absolutely. And HDFC Bank seems to embody that philosophy. They're a force to be reckoned with in the Indian banking sector.
For sure.
And I, for one, am eager to see what they accomplish in the years ahead.
Well, this has been an incredible journey exploring the ins and outs of HDFC Bank. But like any good deep dive, it's just the beginning.
It is.
There's always more to learn, more to uncover, and more to understand.
And that's the beauty of it all. The world of business and finance is constantly evolving, presenting new challenges and exciting new opportunities.
Yeah.
It's up to us to stay curious, stay informed,
Of course.
and never stop asking questions.
So to all of you out there who are fascinated by HDFC Bank and their journey, don't stop here. Keep exploring.
Right.
Keep researching.
Yeah.
And keep that thirst for knowledge alive.
Who knows, you might just stumble upon your next big investment opportunity along the way.
Thanks for joining us on this deep dive into the world of HDFC Bank. Until next time, keep exploring, keep learning, and keep diving deep.